The signs that this system is coming apart are just, they're manifest. They're absolutely manifest. And, you know, all these sovereigns are manifestly bankrupt. I mean, there's no way they can meet their obligations. They're going to, you know, they're going to either default or they're going to severely debase. And there's going to come a tipping point here where, and this is, you know, my sense is that it's a no-brainer on the next ramp to get to 100, 120, and maybe to 170 or 180 ounce. And Bitcoin was at $200,000 a coin, right? Say, no, that 200 grand is cheap. That thing's going to 2 million. $5–10 million a coin.
Thank you, Lawrence, for joining me.
Hey, great to be here. Yeah. Very nice to meet you.
Yeah, nice to meet you too. Especially with your travel confusions. I'm glad you're able to make it to Miami early enough so we can do this.
Thanks.
Yeah. Well, we were just talking before we started recording about what we care about the current system, everything else. So I guess for those that don't know your full background, you have a lot of history in the current traditional finance system, I suppose. So what's your background there? How long?
Just
what all
quickly,
you
I mean, so my whole career has been, I've been an investment manager. And really, actually, for the beginning of it, the first part of it, I wasn't involved in sound money or Bitcoin or gold or any of that stuff. I was invested in technology. I started doing that in the early 80s when, you know, the Apple II came out. And so I watched the internet grow. Well, I watched all the PCs grow up, and I watched the internet grow up, and I participated and invested in all those companies as a fund manager. I always kind of was drawn to the Austrian economics and had a sense that gold was the soundest form of money, and I could tell what was wrong with fiat, but it wasn't hitting me in the face every day. You know, in general, the economy did pretty well in the 80s and 90s, and so on and so forth. And then things started to change in the late 90s. You know, you had the LTCM crisis, and the Fed kind of bailed them out, and then you had the dot-com bubble burst, and the Fed cut rates to 1% to blow the housing bubble, and then of course you had the big one, which really radicalized me. You know, you had the GFC, right, in 2008, and you know, that was just, you know, I mean, I was shocked at what they did, and it was very apparent to me that they were going to have to continue doing that, and that we were going to have monetary debasement for a long time. So that shifted my focus, and of course that was also when the white paper got written. I didn't pay attention. I didn't know what it was. I didn't hear about it. But I shifted my focus at that time to silver and gold, and investing in silver and gold because they were the best form of sound money pre-Bitcoin. And so I started a fund, and we invested in silver and gold mining stocks and did quite well for a few years. And then we ran into the buzzsaw of a bear market. You know, I'll be damned. I mean, I kind of thought the fiat system was breaking up entirely in 2008. I thought it was big enough to do it, but I was mistaken. And of course, they got another bubble going. They got the everything bubble going, and they did that by holding interest rates at 0% from 2009 to 2015, which was just, I mean, I remember in the early days in like 2009, Bernanke saying, "Oh yeah, we'll probably be reducing the balance sheet in a year, you know, and we're going to unwind this. This is all temporary, et cetera, et cetera." Well, they didn't, and then they had, you know, one QE. So, well, we'll only need one QE. Well, they had 3 QEs, you know, and so
well, 4, right?
Yeah, actually 4. Yeah, technically 4, and so their balance sheet went from 800 billion to, you know, almost, you know, 3+ trillion, and so I was just like, oh my God, you know, and so to me that was kind of the launch point of the what I call the critical phase of sound money. You know, I mean, we're now in the real, it's really critical now, right? And but it got launched off of 2008, and we made a lot of things happen from 2008 to present. Of course, then in 2019 they had, you know, they tried to taper, weren't successful at doing that. Powell had to pivot. And then COVID hit, and all hell broke loose, and, you know, they used that as cover to give away a ton of money and print even more money. So $3 trillion balance sheet became a $9 trillion balance sheet. And so, you know, the rest is history. I mean, throughout all of that, I just grew in my conviction that we are on the right path by investing in sound money. And so I've focused on sound money assets more aggressively all the way along. The Bitcoin thing, I think I probably heard about it in 11 or 12. I was very active in the Ron Paul movement. I gave him some money, helped him out, and a lot of the libertarians. And some of those guys were doing it and buying it at $2. Gosh, I wish I'd paid attention, right? You know,
but we all wish that.
Yeah, right. You can't look back. And I got to 100 or so, and I wanted to buy it. Actually, I was really lucky. I was very close to buying some through Mt. Gox. I'd filled out the forms. I was about to send them some money, and they failed. And I was like, oh Jesus, you know, because I know people who lost their money there. And then right after Mt. Gox failed, Coinbase kind of opened and got launched and so forth. So I bought my first Bitcoin in 2013, through Coinbase. You know, just a handful of coins, not a huge number, but I want to say I paid 300 or something for them. So yeah, it was pretty good. But again, I kind of put them away, didn't pay attention, and I don't know, a year or two later, I woke up and was like, hey, these things are a couple $1,000 or $1,000 a pop, and maybe there's something here. So then I started digging in more and buying more and dollar cost averaging, and in 2017, which was kind of one of the first big ramps where it went from that 1,000 to 17, roughly 17,000 in that Thanksgiving of 2017. I just, I thought, oh, this is it, and I just kept buying and buying all the way up, and of course, 17 was the top. Then it went to 10, and I doubled down again. Then it went to 3.5, and I doubled down again. So I've been through a couple of cycles, and as time has gone by, I've gotten more and more conviction that we're right about this. My initial, I think I've said this in other calls or other things, but my initial concern was this is a technology, and it can break. I mean, everyone's, we all have computers, particularly back. You got to remember, I was in the computers in the old days. I mean, we used to on IBM PCs where you had, MS-DOS. I mean, you used to get this thing called the blue screen. I mean, you just be playing around your computer and suddenly the whole thing would freeze. Yeah. Right. And you'd have to reboot it, and so I'm thinking, how can you have money on a computer when the damn thing blows up? It's not. I mean.
Who's going to reboot the money?
Who's going to reboot the money? So hash rates and blockchain. I mean, I didn't get it. Right. I mean, I clearly didn't get it, but I went to, there were some MIT Bitcoin groups, and I went to those, and I listened to some people speaking, and I sat next to some core developers. They kind of explained it to me, and it became. I was kind of like, oh, okay, maybe this really can last. But remember, this is still early days, and you had the fork war, all the forks. So I got a lot of those forks. Fortunately, I sold them the minute I got them, if I could. And then then you had the blockchain wars. I mean, so my principal concern, I always thought this is sound money. I get it, the 21 million limit, but my principal concern was, is this technology going to be robust enough? Could it break? And as we've actually even read recently, some people have done some nice jobs of talking about how, there's a back door, and there were some early problems. There were some times when it really was at risk. Yeah. And fortunately, the core developers kind of got together, figured it out, fixed it. And I think now we're far enough down the road that I put the risk of a big technological failure at a very, very low probability. But in the early days, I don't think anybody. I mean, I know people who were working on it and were developers and stuff, and even they said, I don't know, it could blow up. I mean, we're not sure. I mean, I sat next to a core developer at an MIT thing. I said, what worries you? He said, well, sometimes I'll submit a chain, we'll do it and this, that, and the other. And I think to myself, holy shit, I just croaked the whole network. I mean, this guy's like a PhD computer side genius, and he's worried about croaking the whole network. So I'm like, how am I going to put millions of dollars in this? Or even hundreds of thousands of dollars in this. Okay, I'll have a little bit of it, but time went by, and so you got more comfortable.
Well, that's the Lindy effect, right?
Right.
The longer that something survives,
exactly.
Yeah, and
exactly.
I think most of us, just like you said, how we all wish we bought it $2 or $300 even sounds really nice right now, or in the future probably 30,000 will sound really nice too.
It will to somebody, yeah.
Yeah, it definitely will.
Kids, right?
Yeah.
Because you have a whole coin, holy shit! A coin's worth $10 million. Yeah, I know. It is.
Yeah. But I think people have trouble realizing that back in those early days, even the people working on it, they had no idea. No. Even Hal Finney and Satoshi Nakamoto themselves said that either this is going to be worth a whole bunch of money, tens of millions of dollars, like you just said, or it'll be worth nothing.
Right.
And either one's entirely possible.
Yeah. Well, and you hear these funny stories. I mean, I know I've met so many people in the community now, and I knew some young people who were involved with mining it, and back then it was cheap and easy. The block was. I mean, some of these people had 5,000 or 10,000 coins. Okay, they're in their teens and 20s, and they were running miners. This is in 2011 or 12, and they were running miners out of their the house, the parents' basement kind of thing. And I think, did you keep any of them? And, well, no, it kind of got to $2, and I didn't have a car, and a car cost 40 grand. I had 20,000 coins. I said, fuck it, I sold it and bought a car. I mean, you hear stories like that, and you just think, oh dear God! I mean, can you imagine if you just said, "Well, I'll sell part of it"? You know what I mean? Maybe you didn't need such a nice car, right?
Well, I think about Michael Saylor. That Michael Saylor has become famous within the Bitcoin world, infamous in the traditional finance world for his 140,000 coins. And I think that's one CEO of a moderate-sized company. Like, what happens when there are 500 or 1,000 CEOs all adopting a similar MicroStrategy Bitcoin acquisition strategy? It's like they're not going to get 100,000. They're not even going to get 10,000 coins.
No, they're not even going to get 1,000 coins. I looked at the math. I mean, there are several million. There are almost, I don't know how many billionaires there are, but there's like 20 or 30 million millionaires in the world. I mean, so not even every millionaire could have one Bitcoin. Do you know what I mean? And Saylor ain't selling his. And the other thing is, it's 21. But how many of those have been lost, right? I mean, I think we got to assume that 10 to 20% of the coins are sitting in a landfill because the guy forgot to clean them off his computer. Right?
Yeah, I don't know if you saw my most popular article or thread online. It goes into that exact math.
Yeah. I looked at that. Yeah.
Oh yeah, you
I
did.
loved
Yeah,
it. It was a great thread.
Thank you,
Thread,
appreciate it. Yeah, but it goes to your exact point that I wonder to your comment about how these teenagers and kids are selling off tens of thousands of Bitcoin, not realizing what they were doing.
What they had, yeah.
Yeah, I wonder if we're in a similar spot today. You know, if there's 21 million Bitcoin, there's really more like 14 million after you count for the lost ones.
Yeah.
The majority of them are already held by long-term holders. You know, what if possibly in 5 years, 10 years, 50 years maybe, people look back and are like, wow, they sold 100,000 sats, or they sold 1 million sats. Oh, and yeah. I can't imagine what if they had held.
What were they thinking? Yeah. No, I mean, in fact, some of I have friends who, I think, and I feel sorry for these people actually who were pretty smart. They bought it early. They probably got it under $1,000, and and they did what so many people do, which is they didn't understand what they had, and they got a little greedy. And say it ran to, I don't know, that 17. I know a person who bought it at 1,000. It ran to that 17. He had, I don't know how many he had, but that's 17 extra money, right?
Yeah, 17 in the traditional finance world. That's crazy.
Right,
yeah.
You sell it. You freaking sell it, right? And he did. And it's like great. He made a few $100,000, but and I mean, in his defense, I mean, here a bunch of years later, he could buy it for twice the 17. So it's not the worst mistake ever made, but. I think you have to understand what it is, and we have to. You've got to look at these adoption curves, and there's just no doubt in my mind. I mean, so I was in the venture capital business, and the biggest thing that we always looked at was we called it the dogs eating the food, and that means is there growing adoption and use. And so, forgetting for a minute whether it's a number go up, which will happen just based on supply and demand. What I care about is how many addresses there are, how much hash there is. How many people are coming into the network, how many countries are adopting it, how many Nigerians are using it. That's what I care about, because that's dogs eating the food. And as long as we have more dogs eating a fixed amount of food, the number's going to go up. I mean, it's just that's like an obvious no-brainer. So, and it's surprising to me, honestly, that it's where it's at today, because I think it's incredibly cheap, and I think it's lower risk, arguably, than it was, back before all these technical things hadn't been, ironed out. And so, and the other thing I find interesting about it, just kind of fascinating, is the way it tends to trade, which is it has these incredible ramps and these incredible drops, and then a base builds again, and then another incredible ramp. And so, I kind of feel like we're building, and some say we've got to wait for the halving for it to happen. I don't know. It's unclear to me that that's the case, but I mean, it strikes me that the next ramp, if we kind of build a base between 20 and 30, I mean, it was 15 or 16 briefly, but we kind of call the base 20 or 30, and the ramps tend to be kind of 5 to 6x, sometimes more. So, I mean, Kaiser thinks it's going to 230. It could. I mean, my sense is that it's a no-brainer on the next ramp to get to 100, 120, and maybe to 170 or 180. And, I mean, will I sell maybe just a couple of coins at that level to have a little extra cash? Maybe, and pay the tax. I mean, but, I'm not sure. I mean, I have to wait and see. Yeah.
There's so much you just said that we could go down. I love it. Yeah. One of the things you said that really struck with me is something that when I talked to Greg Foss, he said something very similar to what you said about how even though the price is higher today, that risk in many ways is much lower than what it used to. For those that may not understand that, and not only that, but that the upside's also higher because the probability of success is higher.
That's your Lindy effect, right?
Yeah, Lindy effect. So for those that, because you say that, when I say that to someone in the traditional finance space, typically their brain shuts down,
right. Or they want to argue with you.
Or they want to argue.
Yeah.
So you come from that traditional finance space. How is it that this is different than all these other assets? Because typically, when you have increased risk, you have increased potential upside. Right. But with Bitcoin, it's almost as if as it grows, its risk declines and its upside goes up. So how would you articulate why is it? How is that the case?
It's counterintuitive, and I think the thing that and actually Paul Tudor Jones said it, and it was on Twitter recently. I thought he really said it nicely. If you think about anything that there is in the world, higher price will bring in more of it. So if oil was at $500 a barrel, we'd be poking for oil everywhere in the everywhere in the world, and someday it will be there. But corn. I mean, you push up the price of something, and there is a supply response. People make more of it, which then brings the price back down.
It's a free market.
Yeah, it's a free market, right? This is the only thing or commodity ever invented that I'm aware of where a higher price does not affect the supply. the supply is capped. And therefore it's by its very nature deflationary, which is Jeff Booth's point, which fits in with the way the world is going, because everything should be trending to zero, as our productivity increases. And, it's just, that's the thing that I think causes, people have to kind of grok that. They got to actually think that through and go, hang on a second, you're right. There's never really been anything like this. And that's why, I do kind of think it's spiritually God-given. I think God gave it to us to save us from all our evil ways, and we're gonna, it's gonna wipe out fiat, and we're gonna go back to having a much better system because it'll be based on fairness. That's the big macro. But I think the micro is just look at it as a technological innovation. We created absolute digital scarcity, and now all we need to do, or all that needs to happen, and it will happen because the stock to flow will soon be lower than gold at the next halving. All that needs to happen is that people need to come to the conclusion that, oh, digital scarcity in this form is a really good thing. I want some of that. And they're doing it. Dogs are eating food. We know the number of addresses with one coin in them has gone to an all-time record. We know the number of, you look at any metric, it's growing.
Hash rate, wallets,
any of them. Well, they're all growing. And people, and I always, when I look at an investment thesis, a lot of people, people say, well, what could go wrong? What could you be wrong about? What would really give you great concern? And I think the only thing I could see that would give me great concern would be a technical failure of some kind, a change in the consensus. And I just wanted to slap this guy. I was at an event, it was actually in Britain, one of Peter's events, where a guy said, well, maybe the 21 million really isn't the right number. And I just wanted to, pound. I just wanted to.
This was a Bitcoiner?
Yeah. I just wanted to pound. I was like, well, what the fuck are you talking about? That's the core value proposition. So if I saw a lot of people starting to talk that way, I'd be like, that's not good, right? And then the final one would be, if it just got so dull and there were no use cases, no new adoption. And by the way, the adoption does go up and down a little bit with the price. Look, and sadly, there are people who FOMO into a $68,000 price and then watch it drop to 15 and say, oh, I was bagged, and, blow it out, and they're angry and bitter. And, that's just the nature of this asset. But, Swan has done a nice job of teaching people the dollar cost average. And, anybody who's in it, if they're trying to sell it, you try to explain what it is. I've had several investors who didn't get it, who I told them about it. I said, well, okay, I'm going to go buy a bunch right now. I said, no, stop. You're going to start buying a regular amount every week. And you're going to do that for years. And I'm glad in some of those cases, I was telling them that when it was at 30 or 40 before it went to 15. And, they're fine now. They're back, they're back whole because they got so much at 15 and it's back to 30. But, if they'd FOMO'd into it at 30 and had gone to 15, and
that would have messed with their emotions. Exactly. They would have panic sold.
They might have panic sold, et cetera, et cetera. So you need to really understand what it is. And I guess it just goes back to, there's never been anything like this that I'm aware of, right? It's unique.
That's, people, when I try to explain this to people, what I tell them is that I've talked with so many people I know are intelligent online and now in person, right. And every single time I ask them, what's your biggest concern and in what ways could we be wrong? Right. Because, I think people outside the Bitcoin bubble fail to realize that they look at us talking to each other,
crazy.
And they think we're all crazy, and they think we're an echo chamber saying, "Oh, we have to be bias, confirmation bias," and that's probably true to a very large extent.
Yeah, there is some for sure.
Yeah, but at the same time, I talk to people for hours trying to what do we have wrong, and it's the same thing that you're saying, that I can't find anything that even competes with that digital scarcity, and the biggest error is some form of error in the code, and none of us have found it, and none of us know in that.
That would probably mess it up. My guess is what would happen though is the core developers would say, okay, we're going to roll this back a day, and we're going to start. The new chain is going to start with whatever you had on the prior day at midnight. That's what you got now, and these other blocks got lost or something. I don't know.
Well, whatever the consensus, whatever the majority consensus thinks is equitable, depending on the scenario.
Down to it, which nodes are going to accept, which is the longest chain, and then the most nodes that are going to accept it. That's really the bottom line, right?
Yeah, no, that is the bottom line. So I love your dogs and dog food metaphor. One of the things I think is fascinating is thinking about how there are 28 million addresses with $10 or more Bitcoin, and so there, and so if we assume that there's roughly 10 million Bitcoiners in the world, like a third of them, I want to hear your take. How quickly do you think these things unravel? Because you said previously that you were wrong too early in 2008, and that's what radicalized you to use your word. So do you think that potentially now, as we talk about the demise of fiat and as we talk about the adoption of Bitcoin, do you think perhaps in a similar way we are too early in that sense, or do you think that this time is different? And if so, why do you think that's the case? Yeah, so technical difficulty there. The question being, we talked about how in 2008 you thought it was the end of fiat. You thought that the subprime housing bubble and the great financial crisis, you thought that could be the end of fiat. Yeah, you thought that was it. And now, more or less, both you and I and many, many other Bitcoiners think more or less in the next years, decade or so, maybe less, maybe more, but basically we're coming up on the end of the fiat monetary standard here. And I'm curious, how has your opinion changed in relation to that? And do you think possibly that in the same way that you were incorrect in 2008, we could be incorrect now?
Look, it's I'm human. I make tons of mistakes, so it's certainly possible that I'm wrong again. I don't think I rate the possibility that I'm absolutely wrong as being extremely low, because I don't think we can go to a higher level. I mean, Martians aren't going to come down from space and create a new monetary system and say all this debt's wiped out, and the $1 trillion coin fantasy, that's not going to work. And there is no Deus Ex Machina that's going to come in here and just make things right. I mean, it's broken. It's getting broken at a compound rate. I mean, you look at the interest on the federal debt. It's going parabolic.
Skyrocketing.
Yeah, I mean, it just so fiat. I mean, we are watching and seeing the signs of fiat failure, and it's different because it's at the global reserve currency level. We've seen these patterns. I mean, in Argentina and Weimar and Zimbabwe and Venezuela. I mean, this pattern's been seen in other monetary systems
hundreds of times.
Yeah, it's just never been seen in the global reserve currency, right? Well, except perhaps maybe when Rome did their thing, but that was a long, long time ago. So there's no doubt in my mind that fiat is failing. Now, the trickier question, in my opinion, is that a 2 years from now event or a 15 years from now event? I mean, I doubt it's 15. I just can't see, the math, as Greg points out so eloquently, for our mutual friend Greg Foss. The math is just, it's unrelenting, compelling, compounding, etc. So, I think it's much shorter than 15. I think it's probably much shorter than 10. I probably put the boundary conditions as between 2 and 8 with years. I'm talking about now, with 5 as kind of my most likely. This thing will really have cracked up within 5 years.
So you think that basically mid to late 2020s?
That's right.
Probable.
I think between 2025 and 2030, it's going to be all over for fiat. It's going to fiat.
That's a bold claim.
Fiat, yeah, I think fiat's going to fail.
Yeah.
But think about it. Think about how when it's and Preston does a great job with this. It's kind of engineering and critical state stuff, right? I mean, one day the Soviet Union was, right?
And then it was not.
And then it was not. I mean, it just ice. At below 32 degrees, ice is ice. At 34 degrees, enough time, ice is water. You know what I mean? And so there's gonna come a tipping point here where, and this is, we've all, you guys know these terms, I'll say for others, this is Gresham's law, right? When people, and I've studied a lot of hyperinflations and read all the books and so forth on this topic. The issue, what creates a hyperinflation is when people realize that the policy of the government and the situation mathematically that we're in will never allow them to reverse inflation and money printing. And in fact, it will naturally have to accelerate. And then what happens, just the way we're all hardwired, if we're out running around on the savannah and a lion shows up and it looks like it's going to come eat us, we run like hell to avoid getting eaten. Well, if you've got fiat money savings, and fiat money assets, financial assets, bonds and stocks particularly, you realize, holy shit, I got to get out of this damn stuff, and I got to get out of it now. And so, and then everyone sees the signals, and the pricing is the clue, right? I mean, imagine we all woke up one morning and gold was now $10,000 an ounce and Bitcoin was at $200,000 a coin, right? I mean, imagine that happened pretty quickly. Don't you think the panic would be, some people say, well, it's too high, it's going to come back down. Others might say, no, that 200 grand is cheap. That thing's going to 2 million. Give me some of that. And then, you see what I'm saying? And by the way, bonds would be cratering, interest rates would be going up, stocks would be cratering, and you get a mass event of Gresham's law. Get me out of this burning theater that's called fiat. You know, we're all in there. The price of Bitcoin and gold are yelling, fire, fire, fire. They can't stop printing it. And we're all going, oh shit. I got any savings? I got to get them out of this shit because it's going to become worthless. And that's what happens. That's how it happened in Venezuela. That's how it happened in Weimar. That's how it happens everywhere. So, that, in my opinion, that's in our future. Sadly, that's in our future. Unless we do a controlled monetary reset, something akin to what Roosevelt did in the 30s. I mean, he didn't do it perfectly, and I'm sure we would fuck it up too. But the point is, there is, they could truncate that, seeing that coming. Somebody, and in fact, there are a lot of us who believe and argue that they may try to truncate that with CBDCs, right? Yeah.
I think we're already there to a certain extent, though, because I don't think any of us can find a way at which we can avoid continual debasement and continue printing. And I mean, even your point
in our community, but the problem is our community, we're still, we all amongst ourselves, this is totally obvious. We completely get it. Everybody should be buying this stuff hand over fist, but have you been out and talked to normies recently?
Yeah.
I mean, it's, I interact with a lot of normies. And, whatever. They don't get it. I mean, gosh, this inflation's kind of high. Yeah? You think?
I guess to be clear, I think the math is there, but I agree with you that I don't think the understanding is there.
That's right.
Yeah. So I guess then the only question becomes, at what point do humans become logical? And
I think it's when they get hit over the head. When the gasoline is $10 a gallon. Do you know what I mean?
It'd be higher than that. Yeah, higher than $10.
Well, obviously, but I'm just saying. I mean, and when it's the slope of the curve. I mean, people will start to realize, oh my God. I mean, look at how. There was a miniature version in this country of Gresham's law, on the COVID whole thing. Okay.
Bitcoin is incredible, and it's incredibly important, which is why it means a lot that you're watching this video and you're taking the time. I do this because I believe it is a really, really important innovation that we've discovered a way to not have a single point of failure at global base layer money. See, fiat money, political currency units, and gold, all other forms of money up to this point in history have had a single point of failure. This has been the largest monetary problem in human history for the last 4,000 years. And now we have Bitcoin, and Bitcoin solves that single point of failure problem. And now, therefore, we have a new single point of failure problem, and that is, how do we custody and store that Bitcoin properly for the long term in a safe and secure way that brings peace of mind? That's why I work at the Bitcoin Advisor. If you were to be hit by a bus, does your spouse, do your kids, do your loved ones and beneficiaries know how to access your Bitcoin? Do you have a proper self-custody storage method to where there is no single point of failure? Not from yourself, not from your seed device, not from where your seed phrase is stored. Have you considered these questions? Have you gotten your UTXOs managed? Do you have jurisdictional arbitrage? Have you considered all the trust, taxes, and estate planning requirements that are associated with becoming a high net worth person? Because if you are buying Bitcoin right now, you are going to become a high net worth person. Are you prepared for the amount of Bitcoin you have to skyrocket in value 2x, 5x, 10x, or 100x eventually? That's the time horizon you should have. And so you need to be preparing today for that future. How are you going to custody your Bitcoin? How are you going to leave that Bitcoin for your future generations? Because after all, that's what we do this for, right? You're buying Bitcoin for your kids. You're buying it for your grandkids. And so I highly recommend you start thinking in those long-term time periods now, because companies are coming, charities are coming, high net worth individuals are coming, and all of them are going to realize that having an allocation to a multi-sig collateral custody vault is going to be something that is of serious consideration for them. So once you understand Bitcoin is a beautiful innovation for not having a single point of failure at the base layer currency, now you have to start seriously considering, how do I have my custody stored where there is no single point of failure? Okay, if you want to learn more about that, please click the link in the description. I have dozens of pages of free educational content for you and videos. I'm happy to help in that free way. And then if you want individual help, I'm also happy to help you join the Bitcoin Advisor, where you can be an ongoing client. You can become one of my clients, and I'd be happy to help you in the years to come to make sure your Bitcoin's protected, to where no matter what, no matter if thieves or scammers or spammers or yourself or your family or whoever, no matter whether it's due to theft or loss, misallocation, misplacement, or just other mistakes, I'm happy to help you and be that voice of reason in the coming years ahead. So click the link in the description. I'd be happy to help. Check it out. Thanks.
I mean, in other words, people realized, hey, there's a lot of inflation coming. interest rates are extremely low. I can get a 30-year fixed rate for 3%, and they were kind of putting on the Hugo Stinnes trade, which is I'm going to buy a house. You know, this is a no-brainer. All I got to pay is 3% interest to get this asset that'll be here for the next 30 or 40 years, and you know, and so you saw all these bidding wars, and you know, I mean, it was crazy, and housing prices went up 30% a year. I mean, that was a small microcosm, you know, but people even were doing with cars and trucks. I mean, you know, and some of it was supply chain related in the cars and truck instance, but you know, people were like, wow, you know, I'd rather have stuff than this money, and especially back then when the government, you know, Fannie Mae, Freddie Mac, were willing to loan you 30% money at 3%. I mean, or 30-year money at 3%. I mean, okay, let me get this straight. My house is going to appreciate between 5 and 30% a year, and all I have to pay is 3% interest on that. Yeah, I'll do that.
Sign me up.
Yeah, sign me up. Right. Yeah.
You talked about the historical precedents of hyperinflationary events, and I think most people, and perhaps even a lot of Bitcoiners, have not done the reading that you have on this topic. And I suppose my question is this. When I think of that, it becomes pretty clear to me that when hyperinflation sets in and everyone cumulatively begins to realize, that's when asset prices just get bid up towards infinity.
Right. It's called a crack-up boom. Right?
Yeah, a crack-up boom.
Right.
My question is, how would you explain to somebody, because first you have to understand that, but then you have to understand how Bitcoin comes into the picture, because I think this time, perhaps what would occur is that it's a crack-up boom towards Bitcoin.
Yes.
So the dollar goes down against all the assets.
Yes.
And then all the assets go down against the Bitcoin.
Absolutely. Yeah, no, look, I mean, Paul Tudor Jones said it, and I believe it. Bitcoin is the fastest horse in the monetary debasement race. Okay? It's gonna crush gold. It's gonna crush houses. It's gonna crush, but, you know, give me the choice. Stocks, bonds, you know, gold, a house, Bitcoin. Well, okay, Bitcoin's, in my opinion, the best. Gold's probably the second best. The house is probably the third best. You know, bonds are probably the worst, and stocks are somewhere in the middle. I mean, in hyperinflation, stocks tend to go up a lot, but not in nominal terms, not in real terms. You know, so it's you can just see it and feel it coming, but you get these waves, and this is what tricks people too. I mean, you know, we had this incredible wave, and I mean, look, at the end of 2021, I mean, I thought we were entering a crack-up boom. I mean, there were bidding wars for houses. Bitcoin was at 68,000 or, you know, whatever. I mean, stocks were high, bonds were high. I mean, I was like, holy shit, you know, this is it. It's happening right here, right now. Well, you know, the Federal Reserve probably realized that too. And when Bitcoin, that's the other thing, when Bitcoin went from the 5 to 10 range in the 20...
5 to 10,000, yeah.
Yeah, 5 to 10,000 range in the 20-ish area, and it went to 50 or 55. I mean, you think alarm bells weren't going off in every central bank in the world? I mean, they were looking at each other going, oh, fuck, this is really a problem. Because they'd managed to kill. Gold was always the canary in the coal mine.
Yeah, your gold, gold, I'd love to talk about that difference.
Gold
go ahead.
was always the canary in the coal mine that warned of monetary debasement and inflation, and that's why Gibson's paradox, you know, Robert Rubin, Bill Clinton, you know, James Carville, all those guys, they realized they had to print paper gold to hold the gold price down if they wanted to print a lot of money and grow the economy, and they did it. And so they in effect, the fire alarm of gold got suppressed. And there's a ton of data to support this. Is not a debatable fact. There's 100 gold is a big game of musical chairs. There are 100 paper claims for every ounce of gold that exists in the world. And so, and a lot of those paper claims are in an ETF or somebody who thinks they own gold, but when they say, give me the ounces, they're not there, okay? And so, you know, we could wake up one day and the COMEX and all these different paper versions of gold, you know, they say, sorry, force majeure, we're cash settling. The price on Friday was $2,500 an ounce. We'll send you $2,500. And we would all wait for the physical market to open up, and the physical market might open up and the first price might be $20,000 an ounce, right? I mean, basically the paper market just failed, okay? And so, you know, Bitcoin came along and it snuck up on them and they didn't pay attention, they didn't kill it. And, you know, as I think it was Luke Gromen who coined the phrase so eloquently, he said, you know, this is the only monetary fire alarm that was working, you know, that was actually telling people how much inflation there was out there, right? And it's really great. And I mean, because, you know, again, going from 5 or 10,000 to 50,000 in less than a year and a half, I guess it was, something like that. I mean, that's pretty stunning.
And it's still at 30,000.
Yeah.
Like all the time people make fun of me because like, oh, well, how's your Bitcoin trade doing? How are your Bitcoin stocks doing or whatever?
Yeah.
And it's like, it's still at 30,000.
It's the best performing financial asset ever in the history of mankind. It also has the highest Sharpe ratio, which is an adjustment. You can argue whether volatility is the right measure of risk in the Sharpe ratio, but it's really it's a very unique and interesting phenomena. And I think the average human being has a hard time getting their head around what an invention immutable digital scarcity is. I mean, probably in the same way. I mean, let's do a couple of other examples. Let's go look at copied manuscripts, and then the printing press arrives.
I love this example. Yeah.
I mean, did anybody understand how suddenly everyone was going to be able to get a copy of the Bible? Everyone was going to be able to read the Bible. Everyone was going to say, "Hey, my priest has been lying to me," or he's a pedophile or whatever. and the Catholic Church is going to lose a lot of its power, and there's going to be a Protestant Reformation, and blah blah blah. I mean, all the implications that involved. Or the other fabulous example, obviously, is just the horse and the car, right? I mean, all the people were selling saddles and selling horse-related stuff, and cars were for rich people, and cars were dangerous, and the Brits who, I mean, I find you heard the whole story of how the Brits had these
the red flag
red flag law.
Could you explain that?
Oh, all Bitcoiners know this, but the British, Henry Ford really put the U.S. on wheels between 1910 and 1920. In 1850, the British actually had automobiles. They had their own Henry Fords, who weren't doing a mass production line, but they had moving internal combustion or steam engine powered vehicles. And the train lobbies in the United Kingdom, the people who ran the railroads, said they called them road locomotives, and because they weren't on rails, they were extremely dangerous. And so in order to operate a road locomotive, they had a red flag law where somebody had to walk along in front of the car with a red flag, and in some cases you had to hire a train conductor and put him in the seat to tell you how to drive it. So as you might imagine, that didn't lead to a lot of people buying or wanting cars, because
literally red tape.
It was just literally government red tape to defend the railroad business, right? But I mean, this was in 1850. This was 70 years before. I mean, Britain could have been the leader in the automobile business in the world, but they weren't. It wasn't. All these were repealed right around the turn of the century, about the time Henry Ford was doing his thing, and Germans were. I don't know where the Germans were on this at the time in the mid 1850s, but the point is that there were a lot of people at that time who couldn't see what the automobile would become, how it would drop in price, how all the issues of reliability would be fixed. I mean, there was just an enormous cost curve, that would make it work. And I think that's the same thing going on here today. I mean, people just they're not thinking out far enough to understand how fragile and broken our existing system is. And they just don't understand what a real phase shift it's going to be. I mean, the United States in 1890 was a bunch of people riding horses. The United States in 1930 was a few horses and most people driving cars. 1950 there was 0 horses, 100% cars. Everyone had one. And so, okay, right, that's 70, 80 years, but perhaps this will take another 10 or 20. But we've got money that's broken, that's losing its value all the time, constantly, and then we've got this alternative form of money that's gaining in value all the time, constantly. Humans aren't dumb. I mean, they may be slow. It takes time for the word to spread, but eventually you say, hey, I don't want to hold any of that stuff where I get screwed. I mean, give me some of that stuff, and just. We will, before we know it, we will be on a Bitcoin standard. Nobody will accept fiat currency anymore. Our grandkids will be saying, can you believe those dumb fucks let a Federal Reserve and a bunch of people set the most important price in the world, which is the time value of money? I mean, the time value of money drives every economic decision. Every economist will agree with it. Even the Keynesians will agree with that. It drives every economic decision. And I think most Keynesians, if you said to them, hey, when the Politburo, and I remember this because I was a kid and this happened a lot, the Politburo used to set the price of wheat. And, Russia either had a wheat, excess or a wheat shortage, all based on whether the Politburo got it right, okay? And so they were trying to mess with the market. They're trying to control the free market. Whereas if you let the price fluctuate, guess what? The right amount of wheat gets grown. And so, that's what's going on with the money, right? We're sitting here saying we should have an interest rate like this. Okay, well then, great. We're going to overinvest in stupid shit and build, all this house, and that bubble's going to collapse, and it leads to, as Austrians say, it leads to malinvestment, right? And so, the way the economy would work best is to let the price of money, the interest rate naturally is meant to be the price at which somebody who's saving capital is willing to lend to somebody who's employing capital to build or produce something, and so if there's more savings, the rate goes down, and if they're, and the people who are, the saver is sitting there saying, would I rather spend this now or would I rather get this rate of interest? And the borrower is saying, is the project I'm trying to build give me enough return that it justifies paying this rate of interest? And when that is naturally allowed to occur, then there's a much higher likelihood that you get the right level of development in the right places and the right projects get approved. If you artificially take the interest rate and suppress it down to 0% for a long period of time, and everyone thinks they can borrow for free, they're like, well, what the hell? I'll borrow for free. I mean, Silicon Valley Bank, hey, we can buy 30 or 1% bonds. We'll be fine. Well, no, you won't, because when the interest rates go up, you're going to take a huge loss.
Yeah, it's no coincidence that 3 of the 4 largest banking failures in American history already, at time of recording, have happened this year.
This year, yeah, absolutely, yeah, right. I mean, look, the signs that this system is coming apart are just they're manifest. They're absolutely manifest, and whether it be COVID or the reaction to COVID, whatever it might be. I mean, we have got an out of control monetary policy, and it's there's a video, I'm sure most of you saw it. I saw it in high school physics class of that the famous bridge out in Seattle.
Oh, the one that collapsed.
That start and you get these sine waves, and they just get more and more extreme, and it's kind of it goes to critical states, right? Just the swings get larger and larger and more until the whole thing just blows up. And I actually think that model is somewhat apt as you look at our monetary system right now. I mean, COVID, we had the repo blowout, and COVID came along, and we had to print more money than we've ever printed before in massive quantities. And they said there'd be no inflation, but of course there was enormous inflation, right? And so they looked at that and they panicked and they said, okay, we got this enormous inflation. We got to slam on the brakes so friggin' hard, it's out of control. And so now we're going down the other side of that curve. But this, if it continues, this is going to look like the 30s, because people are going to be going bankrupt left and right as they lose their jobs and the economy is strangled by the high cost of capital. And at that point in time, the political narrative will change. They'll be, well, inflation's not a problem anymore, but the economy's falling apart. We got to print some more money. Then we're going to go up the other slope, and gasoline will be $10 a gallon, right?
Yeah, we're at the point where the only thing preventing hyperinflation, in my view, is the threat of depression, and the only thing preventing depression is the threat of hyperinflation.
That's exactly right. I mean, you were looking at extremes in both directions, and I imagine this in different ways is what's happened as other complicated systems come unglued. I mean, I think they're physical examples of it, critical state stuff, but there's also, I'm imagining it was very similar to what happened when the Soviet Union came unglued. It's kind of like all paths are, you're screwed no matter what path you go to, and they're obviously trying to get it back to and drive us down the narrow middle path and hold off these extremes. But I think I think the system is so broken that there's a lot of things that are working against them, and they're just not going to be able to achieve that. Now, but that does go to what we spoke about earlier, which is how fast does this happen? Yeah. I mean, look, I'm all excited because I think we're in it, and I think it's game on. But honestly, to be a critic of my views, they might be able to hold it together for a few more years.
Well,
they might be able to.
I have a thought experiment along that line.
Yeah.
I'd really like to hear your opinion on.
Yeah.
So obviously Metcalfe's law, being that as you add more users, the value gain
grows
exponent.
Yeah.
So my thought is this: we're at roughly 0.1% global adoption now,
Right.
more or less 0. Something along that line. If adoption 10x's to 1%, 1 in 100 people that have adopted a Bitcoin standard, or at least on their way to adopting a Bitcoin standard, that's still only 1% of the world.
Yeah.
And if we say Metcalfe's goes up by the value of the network doesn't go up by just 10x, but goes up say 30x, 50x, and in the same time period we print 3 times as much money. Yeah. From today to $30,000, that could be like a $3-4 million Bitcoin and still only 1% adoption.
Yeah, easily.
So my question is, what percent adoption do you think it takes for that to be triggered? And then how many millions of dollars do you think Bitcoin would be even before hyperinflation occurs in the majority of fiat currencies?
Yeah, boy, those are good questions, and I really don't have the definitive answer. And I would challenge you a little bit.
No one does. Yeah.
I would challenge you a little bit on your. I mean, maybe if you take all 8 billion people, maybe we're at 0.1%. Let's look at it a slightly different way. I mean, I think if you look at the United States or the more developed world, okay, which frankly is where, I mean, you consider there are 8 billion people, but sadly, maybe half of them are living in poverty.
Yeah, 90% of the
money
is here.
Yeah. If you look at the more developed world where the money is, right? I might argue we're maybe kind of at the 5 or 10% level, in terms of Bitcoin or adoption of sound money, if you kind of lump gold in there, because it's kind of I mean, to me, a gold bug is just a pre-Bitcoiner. They understand the issue. They're trying to prevent themselves from getting hurt by monetary debasement. They just haven't gotten fully comfortable with this newfangled thing. And so take them and take Bitcoiners and call them the sound money camp. I think you probably got 10% of the country.
Really, that just seems really high to me.
No, I think you do. I really do.
Wow. Okay.
Because you got you might be right in terms of dollars. Maybe I'm talking in terms of people, but
okay.
You got there's 10 or 11 trillion dollars of gold in the world, but a lot of it's in central bank vaults or in museums. The tradable piece is 2 or 3, 4 trillion. Bitcoin is what, 600 billion now, roughly.
5 to 600 billion
600
market cap.
Market cap today. I mean, in total financial assets are 400 billion today, so 10% is 40. So no, you're not on a dollar basis, you're not there. But I would think that maybe we're at kind of the 5 or 10% penetration of people. Now maybe I'm wrong on that. Maybe it's lower, but I'm sure you know where I'm going here. I'm going with Gladwell's theory, which is when the number of years it takes you to get to 10%, same number of years you get to 90%. Once and so we're in some part of the inflection curve where I don't really know, but I would think that we're going to get on that steep slope in the next 2 or 3 years. I mean, I think, I saw how many people came around this. I mean, I saw people who were in the 17 ramp. I saw people who were in the, and I know how many people come around. I know the calls I get, the interest level I get, people I get, I mean, I had people who were incredibly skeptical, and I just said, get off zero. Just, once they get off zero and they start to read about it, think about it, they go, Jesus, and even if it's not doing particularly well, they're kind of like, oh yeah, I think I get this now, and so they buy more. So I guess my point is that we're pretty close in my opinion, and I think with the next swing here, I mean, I don't think it's hyper Bitcoinization on the next swing, but I do.
Me either.
Yeah, but I do think, I mean, people. That's the other thing. People are generally speaking pretty good at pattern recognition. This thing's ramped and dumped a bunch of times. It ramps from $1 to 10. I mean, you can go back and look at them all, right? It went to 100, went to 1,000, went to, and with off of each of those ramps comes back down 78%. It was the 17,000 ramp, came back down. Then there was the, 20. I mean, it's each time. And so, my gut is the next ramp is, as I said earlier, the next ramp's 150. Call it as a mean number, and then it probably corrects back to 40 as the new low off of that one. But then 40 builds a base. And then the 40 goes to 450 or 500,000, and then that correct. You know what I'm saying? I mean,
See, there, I think you're too bearish because right now we're in the 30s. What if 40 for next?
Well, but we were in the 30s, but the low on this time was 15.
That's true.
So but maybe, yeah. I mean, it's, and I have noticed the drawdowns haven't been as large, and the volatility is decreasing. I mean, it's ever so subtle. I've looked at the volatility and the vol numbers, but it is decreasing over time, and so. As it becomes, Lindy effect more widely adopted, the volatility should go down, and it will go down. But, but to where we go, I mean, so this ramp, in my opinion, probably occurs, late this year, sometime next year, at the latest in 2025. Then we correct, and I mean, assuming the fiat system doesn't blow apart. I mean, I think the thing you always have to consider is the possibility that the government really blows it, and then the next ramp is. Tell me what the government policy is going to be. I mean, because if an MMTer gets in there, or we mint $1 trillion coin, or we, the Federal Reserve balance sheet and the next round of printing goes to 20 trillion, up from 9, maybe the drawdown won't be as fast. I mean, at some point, we're gonna reach the critical state, and at that point, it's going to go through 300 or 400, wherever the hell it's not going to stop. It's going to go to 1.5 million.
A million, 10 million.
Right, and then that 1.5 million or 2, well, that could correct back down to 400 or 300, but then the next one will be to I don't see why, based on we've got a lot of data on this thing now. We've got 14 going on 15 years of data. I don't see why we should assume, and I always just do it based on anything I look at investment wise. Just look at the history of it and assume that nothing about it fundamentally has changed. So I got to assume this history is going to repeat. We're going to see 5 to 6x ramps, corrections that are severe. They used to be 90, 80%. They're now closer to 70%. Maybe they grow to 60%. Maybe they become 50% as it gets more widely distributed. And what's the top? There is no top, right? Really, there actually is no top. But I fully expect in my lifetime, I hope to be around another 20 years. I fully expect to see $5-10 million a coin, something like that. And now the other thing that makes all of this talk tricky is we're looking backwards, measuring.
Yeah, I was just about to comment on that
because at that level, gasoline might cost $1,000 a gallon. Yeah. Right. So what we don't know is we've got this other piece moving with us as well, and at some point we do just totally get hyper Bitcoinization. It's just the fiat completely fails.
And that's the kind of hyperbolic curve that I've gotten so much hate for online, is that you go from 0 to 1 and then you go from 1 to everything.
Right. Well, you've probably seen the Weimar charts, and
yes.
And so that's just the way it goes. Eventually it goes. It doesn't stop.
Societal trust decreases exponentially.
Exactly.
Yeah.
And it's totally lost. And when that happens, there's no going back. It's not, and you were either there or you weren't. There was never a point in time when the Soviet Union started failing. There was never a point in time, they're going to get their shit together and it's going to come back and they'll still be a Soviet Union. No, it's gone. Mm-hmm. It's just gone. Yeah. And that's the thing to keep in mind here, and that's why, it's so important to be early rather than late.
Yeah. Yeah.
Right? And we are incredibly early. When I have people tell me that, 30,000 is a terrible price, we all went through this. I had people at 15, they're like, well, I'm not going to buy it until it goes to 10. I'm like, look, why don't you buy half of your lot right now? And that way, if it doesn't go to 10, you'll have some, and you'll feel good about it. Oh, no, I'm going to wait. I'm going to wait till it goes to 10. Well, you fucking idiot. It didn't go to 10, and now you have 0, and now it's at 30. You're like, well, shit, I should have bought it at 15. How am I going to buy it? You buy it all the time. You buy it no matter where it is. And the smartest way, obviously, is dollar cost average it. But, yeah.
I think most people will have the pain with Bitcoin, not those that don't buy, but those that do buy and then sell. Because those that buy at $2,
of my friends,
sell at 20.
I have a lot of friends that did that. They actually were smart enough to get it. They bought it. They made a lot of money, and they thought, "Oh my God, I died and went to heaven," and they sold it.
Yeah.
And they didn't understand fundamentally what this is.
Yeah.
And that's, to me, that's the real difference between somebody who's playing around in it and somebody who's a Bitcoiner. A Bitcoiner really understands fundamentally what this is and wants to have as many sats under his or her control as they possibly can, because they know that in a long time scale that will best serve them, their family, their heirs, etc. They know it. It's core to the belief, to the belief. But I was just on the phone with a friend, and smart guy, gets Bitcoin, rich guy. Okay, I'm not gonna tell you who it is, but
yeah, of course, yeah.
$30 million of gold. Okay, it's $30 million. Retired, about my age. Okay, made a lot of money. It's $30 million of gold. $3 million of Bitcoin. He said, "I'm calling you because I want to ask you about my Bitcoin allocation. I'm beginning to think maybe it's light." And I'm like, "You think?" He's got $30 million of gold. Now, don't get me wrong. Most people would kill for $3 million of Bitcoin, but so he asked me. My numbers are totally different than that. So it's not. This is not me, and it's not relevant to me. But he said, "Well, let me tell you. You're in this trade. You get it. I said, "Where are you?" I said, "I'm half and half. I got half my money in gold, and I got half my money in Bitcoin. The reason I have half in gold is gold never goes down 80% a year. Do you know what I mean? And I want to make sure, I never know when I'm going to need money. I hope I don't need any of this money, but whatever. you know, it'd be at my age, it'd be too much of a roller coaster ride to watch my net worth go down 70% because it was all in Bitcoin. That would be just too hard to do. You know what I mean? I couldn't do it. But you know, if gold goes down a little bit and Bitcoin goes down 70%, what the hell? It's a long-term hold. If I were 30 years old and my kids are in their 20s, and all they save in is Bitcoin, and if I were 30 years old, I'd have 100% Bitcoin. You know, I wouldn't.
Really, if you were 30 years old?
Oh yeah, yeah. I mean, I'd have, maybe you want some gold coins for bribing the border guards. Yeah, because that's what I think they're good for.
Because they don't yet accept the Bitcoin. Yeah,
because they don't accept Bitcoin. Or you want some silver. Actually, I've got a ton of silver eagles that I bought years and years ago. Between
really? Okay.
Yeah, between $2 and $8 an ounce. The silver's at 26.
Yeah, yeah.
But by the way, I rode them up to 50 a couple of times. I didn't sell one. What kind of an idiot am I, right? You know, I paid 8 or 9 for them, and they went to 50. I didn't sell a fucking thing. Still have them. And they're valuable to me because, you know, in a real Mad Max scenario, which I don't think is likely to happen, but it could for a brief period of time. That silver American Eagle, that's you know, it's an ounce. It's $25. I mean, that's a really fungible, easy to use thing that anyone knows what the value of it is. Do you know what I mean? Yeah. And so I mean, if the internet shut down, or you know, again, if I were going to the farmer and saying he doesn't know what Bitcoin is, and care about Bitcoin, and say, you know, give me some hamburger from that cow you just slaughtered. You say, fine, that's going to be 4 eagles. Okay, fine. Here are the eagles. Yeah, that kind of thing.
Yeah, I mean, I don't necessarily disagree with that. I guess my view is that if we get to that point,
it's going to be awful.
Yeah, yeah. Then at that point, food's going to be a bigger commodity than.
Well, that's probably right.
Yeah,
yeah, that's exactly right. Yeah.
So you touched on this a minute ago, and this is one of the things I really wanted to ask you. So many people that are learning about Bitcoin, you know, most people in the Bitcoin space are younger, such as myself, but you have the experience in the traditional finance space. You understand these allocations. Like, as you said a minute ago, you want to avoid these drawdowns. Most people don't have that 100% allocation to Bitcoin,
right.
And
maybe they shouldn't. I mean, they probably need to keep a cash balance, and they want to, you know, in case they lose their job, or you know. And by the way, I would never be levered in Bitcoin, right? I mean, this is another story, just briefly. I saw so many sad stories. Remember when Plan B was out saying it's going to 150,000?
Yes.
3 years ago. And all these young people were like, oh, this guy's a genius. He's got this model. It's going to 150,000. And they started levering up their Bitcoin.
Yeah.
And it had a big correction. They all got wiped out.
Well, again, that goes to what you're saying about being a Bitcoiner. If you really understand this and you think it's very probable that there are going to be massive price swings of 300, 500, 700% in a very short period of time, then there have to be 50 to 70% drawdowns.
Exactly.
And you can't have
leverage.
Yeah,
because
exactly.
Because one drawdown and you're gone. You're wiped out.
Yep, you're and that's the unfortunate thing. You know, Weimar Germany and other examples is that people levered up on gold, and the same thing happened to them. It's just human.
You can see it in that chart that Murmacan did.
That's the whole stay humble, stack sats. So I guess we've been very pessimistic on fiat. I guess as we wrap up here, for those that are beginning to understand that Bitcoin is that fire alarm, it is that fire insurance. I guess we talked a little bit about bonds, we talked a little bit about gold. I guess my view, and I'd like to hear your critique on this, my view is that most people that have, let's say in your demographic, you know, 60% bonds, 40% stocks, maybe some real estate. My encouragement, not financial advice to people, is always take some of that political monetary energy, some of that bond energy that's fueling the war machine anyway, you know, maybe 10% of that, 30% of that, whatever percent they feel comfortable with, and just put it in Bitcoin and forget it. So if you were talking to somebody that is kind of getting into that whole fire analogy thing, where do you think they should start trimming their allocation back first? Is it bonds, or is it something else?
No,
and what do you think they would do to maximize their exposure to Bitcoin while also retaining their mental peace as they enter retirement?
Yeah. Well, I think clearly bonds. In my opinion, bonds are the absolute worst investment in the world right now on so many measures, because you know all these sovereigns are manifestly bankrupt. I mean, there's no way they can meet their obligations. They're gonna either default or they're going to severely debase. And so, you know, you're losing on a real basis in every year in bonds. You're losing, you know, multiple percentage points. I mean, you know, I don't think the state of inflation is accurate, and at 10 years only paying mid-3s today. And so if you say inflation's really 8, you're losing 5% a year. 10 years, you lose half your money. That's ridiculous. You know, so bonds are obviously the first choice. And then I think, you know, people say, well, what's the minimum, you know, thing? Well, obviously 1% is better than 0, but my belief is that almost anybody with an investment portfolio can absorb a 5% loss and 5% doesn't really change their life if it goes the wrong way. And so I always encourage people to think about starting with 5% of their net worth in Bitcoin, because the thing about Bitcoin is, we talked about, we haven't used the word here, but it's so asymmetric. It's great. It's the most asymmetric trade in the world. It ought to go up from 30. It ought to go up at least 10 times and probably 100 times in a 10-year window. So, I mean, and there are very, very few investments in the world where you can get that kind of an upside, right?
So for this kind of low risk.
Yeah, for a relatively low risk thing. Well, low risk, but in traditional terms, people might say, well, it's pretty damn volatile. I mean, you got to remember, I know people who are like, well, geez, my portfolio was down 10% this year, and they freak out. I mean, really, well, when you're older, that's what happens. They and particularly in today's world where the stock market's marched, they've had so many good years in the stock market, that they think to themselves, well, I'll just stay with it. The stocks are working. I mean, that's, to me, the biggest piece of confirmation bias that's going on out there right now, and I think it's going to be very sad, is my generation has done extremely well in the stock market post-2009 because of the way they mispriced capital. And so all that excess money got printed, and it all went into stocks. And that is going to unwind, and it's going to really hurt people who stay there. And they can't see it yet, and they don't know that that's true, but it is true, in my opinion, based on any kind of historical study of the cycle. And so, I would take money out of stocks. First I'd take all my money out of bonds, or a piece of your money out of bonds. They do provide interest, and then I would take a lot of my money out of stocks. And in my case, I'm pretty much 100% sound money, and then what's not sound money is, I have some real estate. So, but that I enjoy using that, and I know that, it's not levered, so I know that it will hold its value. And the real estate, what I've focused on in real estate, and this is a thing I think too few people have focused on it. My generation, we saw our parents get rich on real estate because they all bought it in the 50s and 60s. 70s, there was huge inflation. I mean, my parents bought a house in Ann Arbor for $40,000 in 1965. Okay, I mean, at the end of the 70s, which is only 12 years later, that house was worth $400,000. I mean, it was a 10-bagger in an inflationary period.
For a house.
For a house. Right? Right. That's pretty good, right? I mean, $400,000 today, it's a small. No, it was one of the nicer houses in Ann Arbor in 1979. Okay, and so the point is, and we all saw that. My generation saw, oh shit, housing works. This is a good thing to be. Well, back then, they were paying a modest property tax. You don't really own your house. The state, the local municipality is your partner in your house. And the taxes have gotten so high to put everybody through school and all the other stuff that, it might appreciate in value, but if you're paying $50,000 a year in taxes to live there, and the taxes are going up faster than the value of the house, you're actually getting behind on your real estate. It's not a good investment. Yeah. It's just a shitty place to be. Are we out of time?
Yeah. Well, as we run out of time.
As we run out of time.
Yeah. I've really enjoyed this. Thank you so much.
Too.
It's great to shoot the breeze and think about the future. So we've been, like I said, we've been quite down about the fiat system. What keeps you optimistic about the future?
Well,
when you think about sound money,
you guys,
Bitcoin,
young people, the fact that this exists, we're at a conference, thank God for Bitcoin. I really do thank God for Bitcoin. I mean, this is, I've been running around the gold show, a bunch of old, tired people who are frustrated and angry, who've been screwed for 30 years, okay? At least here, you've got young people with a lot of hope, and you got a system that's really working. I think Safety changed the world with this book. My wife said, you're an old-fashioned gold bug, and nobody wants to hear it. When we go to cocktail parties, just please don't talk about gold. We want to be socially accepted here, right? And now I'm like, I go to these conferences, and I meet people, and I got kids who are in their 20s and 30s coming up to me and quoting von Mises. I'm like, holy shit, how did this happen? You know what I mean? I mean, it's really great. It's like, it's kind of like us old guys. And a lot of Bitcoiners look at us, you guys are old fossils, and you believe in these, boomer rocks and all that other shit. But remember, we were fighting this battle before they were born. Do you know what I mean?
For decades.
Yeah, we've been fighting this battle for a long goddamn time. And probably what gives me the most optimism is, kids, the younger generation, completely getting this, seeing how utterly broken it is, and committing, as you're doing with these podcasts, yourself. I look at Jason Lowry, I look at Marty Bent, I look at Matt Odell, I look at, Jack Mallers. I see this young generation of economic, monetary heroes, emerging and preparing to die on the hill of sound money. And that gets me fired up, because, I've been fighting this fucking sound money battle for 30 years, and I've been getting my ass kicked. You know what I mean? And it's kind of like, got some reinforcements, you know. So that's kind of, I mean, I guess that's the thing I'm most excited about. The thing I worry about the most is, you know, I'm 65 years old. I just want to make sure that I want to make sure that, you know, that unlike Roosevelt, who didn't quite see the end of the victory that he more or less, you know, as a grave, you know, as a senior guy, orchestrated. I want to make sure I'm here to see the win. You know, I think the win is coming, but I just want to make sure that I'm here to see it. And I, you know, I mean, assuming 65, probably a 30-year window, it's a pretty high probability I'll see it.
Well, yeah, that's the amazing thing to think about is that if we just extrapolate current adoption, it's faster than the internet, and it's like, you know, people say, oh, maybe in 20, 30, 40 years, Bitcoin might be something, but it's like, you just do the math. Yeah, we're very early in terms of adoption, but the timeline.
In some ways, well, I challenge you a little on that though. In some ways, it's faster than the internet. In some ways, it's not. I mean, you know, the internet. I mean, I was in the internet. I invested in it, and it was slow, especially in the dial-up mode. I mean, and like so many of these technological changes, it took a lot of pieces coming together. I mean, when we started, I don't remember how old you were when it all went down, but we started in the internet in '95. I mean, you had to take a phone and put it into a cradle and dial up on a modem, and I mean, it was clunky as shit. I mean, it was just clunky as all shit. And even in 2000. When the first browser came out, Netscape browser came out, it was still clunky as shit. You know what I mean? And then Windows came out, and Windows was clunky as shit. And it really wasn't until about 2003 or 4 that the internet really started to work. You know what I mean? And so that was 10 years. And if you kind of consider the launch point of this maybe as being 2017, so that 10-year point would be in 2027. And you know, so maybe in my earlier estimations of hyper-Bitcoinization, this, you know, fiat failing this century, or this decade, maybe I was a little too optimistic. Maybe it happens in the early 30s. I hope it doesn't take that long. I'm tired of this shit. You know what I mean? It's like let's get on with it. You know, let's burn this thing down and get a new system that's built right. You know,
right? Built on truth instead of misinformation.
Exactly. That human beings cannot tamper with and corrupt.
Yeah.
Because it's math.
Yeah.
Right.
It's just math.
It's just math. Yeah. So.
Well, thank you very much.
Thank you very much.
Yeah.
It was really a pleasure to spend time with you. I enjoyed it.
Yeah. Thank you.
Another one of the bright young voices in the space, making a difference. And you know, we need just an army of you guys, you know, to keep fighting this battle. So I'm pleased to see you here.
Thank you.
It's good stuff.
Thanks.
Yeah.
Love it.